So we know what the numbers had to say here, Oliver. The only thing we don't know is if you wore your corn tie today like you traditionally do. But what did you think of the numbers when they come out here from USDA and how the markets responded to that?
Well, it was a big sigh of relief. You always have a little bit of nervousness going into reports like that because you're not really sure what we're going to get. The expectations obviously came in kind of on par with expectations, and that is creating a little bit of a sell-off. It wasn't overly bearish, but it wasn't bullish, and we know that bull markets need to be fed, and this was not enough to do it. So you're starting to see some long liquidation from the funds that we've been talking about for the last several weeks now, have established a rather long net long position, and this wasn't enough to convince them to keep that position full tilt to the long side. So you're seeing some position squaring, but all in all, we really haven't gone anywhere in the last week for corn and soybeans. We've just been trading sideways, and as I'd mentioned earlier in the week with you, we think that there's going to be plenty of opportunity for traders on both sides of the market here going forward as we look towards the end of the year. So it's kind of one of those things where it's less of an investment over the last several months. It's been a great buy and hold strategy, but now you see a little bit more of a trader's paradise, so to speak.
Okay, so the question remains then, does something, or maybe the lack of something in this report, set up a scenario one way or the other in the January report? Is there some kind of underlying read between the lines message here that maybe traders will look into before we get to January?
You know, potentially. I think this is just one of those reports where there just wasn't a whole lot there to influence buyers or sellers or offer just another layer of conviction. So you're going to see a choppy trade continue, and I wouldn't be surprised to see a little bit more weakness come into the market. For soybeans, we've been really kind of looking for a little bit more of a break down to 11.15 to 11.20. That's a ways away from where we're at now, but still, that is where trend line support comes in from those lows. And so a retracement back to that level, I think, would probably do a little bit of a cleansing from people who've been trying to buy these smaller pullbacks that we've seen here over the last couple of weeks. And I think all in all, we get down to that level. There's a good enough fundamental backdrop in the soybean market where we're going to be able to find some support and ready, willing, and able buyers down there.
Soybean meal down $2.30 at $382.10 a ton, and the oil market here today up 41 pennies at 39.17 cents, and that is per hundredweight. Oliver, stick around. We'll be back in just a moment and talk more and see how the livestock trade may wrap the day up. We'll do that next, right here.